Yes, you read that title correctly. You got it exactly right. My name is Karla Dennis, and welcome back to my channel, where I teach people like you how to make tax plays like people like this. In this video, my friends, I am going to walk you through how to write off a G-Wagon. You know, the one you've been keeping your eyes on. By the end of this video, you're gonna know exactly what you need to do. But before we jump in, I want you guys to know I love providing wealth building information. And I always appreciate when you guys like, comment, or subscribe. So turn on those post notifications so you don't miss out on any of this wealth building information. Now let's get after it. When you are purchasing a vehicle, the question always comes up, should you title it in your name? Should you get it in your personal name? Let me tell you exactly what you need to do. It's best always if you title the vehicle in the name of your business. The reason I say that is because it's a vehicle in your business name. It already denotes that this is a business vehicle. But what if you don't have the credit to title it in the name of your business? Don't worry. There's a code section 351, that allows you to contribute your vehicle to your business. It allows you to contribute property to your business. So that property can be in your name. You can contribute it to your business and use it for business. We're going to make sure you get this G-Wagon. The primary business use of that G-Wagon needs to be for business purposes. No, I did not say you couldn't use it for personal use. I said the primary usage has to be for business use. That means that the majority, at least 50% or above, needs to be for business use. Incidentally, you may utilize the vehicle for personal use, but that's not the primary reason. You want to make sure that you document your business use. You want to make sure you document your personal use so that there is accountability from you to your business. Why? Because that's what IRS requires. There be accountability when a business owner is using the vehicle for personal usage. Depreciation. Now, this is my favorite part of the conversation. When you purchase a G-Wagon and that G-Wagon weighs over 6,000 pounds, I know it's gonna be heavy, but you're not gonna feel it because you're gonna be rolling, right? Exactly. When it weighs over 6,000 pounds, you are able to take a Section 179 write-off on the vehicle. That allows you to write up the majority of the cost of purchasing that vehicle in year one. Now, I said Section 179. That's a code Section 179 that allows you to expense out equipment, because a vehicle over 6,000 pounds is considered to be equipment, so you can expense it out. Once you take the maximum 179 expensing, you can then depreciate the rest if there's any left. Every year, they switched how much you can take on 179 expensing, but you can still come back and depreciate the remainder over time. So we're not missing out on any write-offs. I want you to get that G-Wagon, and I want you to be able to take a large write-off to reduce your taxes. There are two ways that you can write off the vehicle: actual expenses versus the standard mileage rate. When you are doing actual expenses, that includes that accelerated depreciation. So if you want to take the big write-off of the 179 expensing, you automatically have elected actual expenses. That means you're going to write off your actual gas. You're going to write off your actual cost of your insurance, the actual cost of having your car washed, having your car detailed, having your windows tinted, and whatever else you do. Actual expenses. So you make that election when you're doing a 179 expensing. However, if you choose, and some people may choose, not to do the 179, not to take the big write-off in year one, and you may choose to do the standard mileage rate. That's okay. But here's what you got to do. You got to make sure you are tracking your mileage. It's very important. Get yourself a mileage app on your phone that tracks your mileage. And perhaps the G-Wagon has some mileage tracker in it as well, right? You might want to utilize that. But track your mileage so you can take your actual miles times the IRS mileage rate and get your write-off that way. But remember, that write-off, or miles times the mileage rate, is all you're writing off. You're not writing off interest on a car payment. You're not writing off the actual cost of the vehicle. You're not writing off actual insurance and actual repairs and expenses. You're taking the standard mileage rate in lieu of actual expenses. And depending on where you are in your business, how much income you have, expenses, or whether you're at a loss or profit, you might choose to take the actual standard mileage rate. So you're going to make a strategic decision on how you're going to write off the G-Wagon. The bottom line is get the G-Wagon and get a write-off. Now, I want to run some scenarios with you to help you understand when you should take the standard mileage rate versus actual expenses. Now, I know we've been talking about a G-Wagon, and a G-Wagon is pretty costly, typically about $140,000, $150,000. And I know you're not going to chop your G-Wagon into 3 pieces. So typically at that price, you probably are going to want to take actual expenses. But what if you did buy a car where the car was cheaper? Let's say you purchased a car for $30,000 and you are doing 50,000 business miles every single year. In a scenario like that, it makes sense to take the standard mileage rate versus trying to write off the cost of the vehicle. The vehicle at $30,000 may not weigh over 6,000 pounds, and it's probably going to be more useful just to take the standard mileage rate. But what if you have a vehicle that is costing upwards of 140, 60,000, 50,000, and you're only doing 3,000 miles a year, and they're 3,000 business miles, right? In that particular case, your actual expenses, the cost of the vehicle, whether you're making a monthly payment on the vehicle, your insurance is probably going to be higher than 3,000 miles per year, 3,000 business miles times the standard mileage rate. So you really got to kind of look at it. My actual cost out of pocket versus what the miles would look like for me from a business perspective. Let's go over one more scenario. And you have to remember that your business miles need to be at least 50% usage of your vehicle. That's very important. Let's say you have a family car that is also used for business purposes, right? And perhaps that family car, you are putting more miles on your family car than you are business purposes. You're not getting 50% of business miles. In that particular case, you are going to want to take the standard mileage rate. So there's so many different variables that you need to look at. The key is I wanted you to have some scenarios so you can start adding on to how you're already thinking, because you're already thinking smart. Add what I've said to that so you can make a great decision. There are 4 steps for you to write off your G-Wagon. You have to first make sure you're purchasing the vehicle in your name or in the name of the business, which is preferable. You also have to make sure that you're using that vehicle 50% of the time for business. That's an IRS requirement, and we want to make sure you are able to document and hit that requirement. Step 3 is depreciation. You got to get that depreciation on that G-Wagon and perhaps take that Section 179 expensing, because your vehicle is going to weigh over 6,000 pounds. Step 4, determine whether you're going to use actual expenses or the standard mileage rate, meaning you're going to track your miles and you're going to use IRS standard mileage rate. Remember to vet it out so you will know what's going to be best for you. That is how you're going to write off that G-Wagon, be rolling, and reduce your taxes. Currently, the standard mileage rate is 67 cents, but make sure you check it because it changes every single year. Now that you guys know how to write off a G-Wagon, I want you to comment G-Wagon in the comments. I also want you to like, comment, and subscribe, because now that you know better, you absolutely have to do better.